So some of you have asked about, so you watch the course and then you've asked, you don't know where to start when you come to a chart. Now, obviously from watching the course, it is very easy to see, and with the course is obviously focused on a trade that's actually already played out. And I think, actually no, I know for the course video that trade was actually something that we actually took. Well, actually I didn't take it live, someone took it live, but I sent the chart in myself. But you're still sort of struggling to understand how to actually approach the market. So what I'm going to do is going to show you a top-down analysis of AED JPY, and this is a trade I'm currently in. It's taking forever, and I'm going to explain exactly what I did to approach this pair, why I've taken it, where I have, and we'll go from there. So the first thing I need to see is, where is my overall bias? Now my overall bias is bullish, right? Why? Because if you see from this perspective, we've got now bear in mind my style of trading is more swing style. I rarely do intraday, but the process is pretty much the same. You just lower the time frames. But what you need to realize is, you need to understand, the reason why I do swing trading is because I want to reduce the amount of chart time as much as possible, to the point where I could place a trade and hold that for a good few weeks. Even if I can hold it longer, that'd be perfect, because the rate of return is great, and it's less stressful. And for me personally, I don't want to waste my time on the charts. I mean, swing trading for me makes me enough. I'm happy. But it depends on what you want, really, to be fair. So if you understand from the monthly perspective what is going on, price is actually bullish. If you see, we've got the impulse, successful retrace. So we know it's bullish, right? But we need to understand, where can it possibly reverse from? Should we start looking for short at any point? The only point that I can see that's clear is this OB that is sitting here, because that OB cleared, caused this impulsive move, which went on to break structure. Well, broke minor structure. It didn't actually break the low here, did it? No, it didn't. That broke structure come from here. So, to be honest, this could be a better swing. It should, well, in theory, I would expect it to violate this OB, because it only broke minor structure, so I shouldn't expect anything more. But all I know that if I'm looking for longs, I should be okay to hold that pair for pretty much as long as possible, until I get to a point where price starts to show me otherwise on the higher time frame, right? Okay, let's go to the weekly and see if there's anything different. No, so it's exactly the same situation. We still got that POY sitting there, and we are still bullish, right? It's very clear that it's bullish. Now in this case, right, because it's bullish, should we start looking for counter trends? Now I think that's the issue. I think you're instantly looking for a reversal play, but I don't see the point why. Okay, because the reason why, if you're going to go for example, swing trading, right, you need to go pro trend for swing trading. You shouldn't be looking straight for a reversal, and to be honest, your probability is lower looking for a reversal. So when you approach the market, let's try and approach it with a situation where you want to know what the overall bias is. And even though my entry was pretty much late here, because it is late, and I'll explain why, we still need to understand that we're going pro trend, so I can hold this trade quite nicely and just let it run. I could take my partials whenever, and just see how long it goes for, to be fair, because it can have a huge potential, even if I got a small volume on this trade, right? So on the daily, what do we see is we've got this sort of base form, and then have an impulsive move. But the real low in this situation, from that range high, right? We've got a range high and a low in this situation. The low in this situation would be this one. Okay, so that would be the low. Sorry, that would be the low, that would be the high. Okay, and we understand that, but we need to see where could price possibly reverse from. And the reason why that's the POY is purely because of that impulsive nature that's happened here, right? And left clear imbalance sitting here. So, and it also formed a base. So what we know about the base is, obviously you got base, rally, base. No, sorry, rally, base, rally here. Okay, so we know that this could be a potential POY, and all we need to look for is if price, if it marries up with any other time frame. To be honest, if price was to come this far, that's a very deep retrace, to be honest, and I wouldn't expect it. If it does come here, and if we do get a reaction, I wouldn't expect it to hold, to be honest. But obviously, we never know. We never know. I mean, if price could have reacted here, I think when I sent the POI, I did mark out this lower one. That's here. But anyway, let's see what's happening on the 4 hour. So the 4 hour is generally the time frame that I prefer to start marking out my POIs. And this is a very similar situation where we have this sort of base, rally, base, rally, okay? So in this situation, it's basically impulse, retrace, impulse. But we don't really get a retrace here, to be honest, or here. It's very just sideways movement. What do we know about sideways movement? We know that this is an equilibrium between the buyers and sellers. So when there's an impulsive move, that's an indication that institutions were active, right? So in this side, right, even though we've got this move here, where did it originate from? It's here. Now, I wouldn't use this on its own because it's just a 4 hour. The daily and the 4 hour marry up nicely at this POI, so I would prefer to use this one down here. That's why I would waited for price to come here. Once price actually tapped it, I actually missed the entry point here. I think I don't know what I was doing. I was either asleep or just missed the alert. I don't know. I can't remember. I can't remember what happened there. But do you need to worry? No. Why? Because you can always get another entry. All you need to do is follow. Now, when you understand that if you follow, because it's a daily time frame, right? POI. Now, if you follow the time frame rules, the rule of 3, we can skip one, then look in the entry on the 1 minute or the 30 minute. It's completely up to you. So I stuck with the hourly just to see when we get a change in trend in this situation. So here we get a break of structure here, right? Break of structure, and we've got the first impulse, and we're waiting for the successful retrace, right? Now in this situation, right, now we're only coming back to this point for this inefficiency fill that's sitting here, okay? Now in this situation, obviously this is a lower probability purely because it's going to be the entry on the first break of structure. However, you have to bear in mind this is the hourly, so we can actually refine this even further. Now if you haven't watched the entry video, then I'll basically explain it again, but if you have watched it, then this part it's just a repeat for you. So on this time frame, we can see that in the middle of the night, so I didn't actually see this one, but we have this impulsive move, and we could have got an entry on this point here, right? We've got a failed low and then an impulsive move. So entry pattern number 2, right? So we could have got an entry at this point. However, I didn't get that. Now, the reason why I didn't get that, because I was asleep and I woke up about this time and then price was somewhere up here. So with that being said, right, because we've got this impulsive move, right, and we did break on the 5 minute, it'll be minor structure. We need to understand that this is going to be major structure in the 1 minute, okay, if we follow what's actually going on. So in this situation, what can we see is we create a low, high, impulsive move, successful retrace. My entry was based off the extreme. I could have got an entry point here, but the reason why I didn't is because this impulsive move left clear imbalance behind for me to say there's enough reason for price to come here to mitigate before continuing. And it sort of marries up with the 5 minute as well. Sorry, that was not, the entry was here, sorry. 699, there we go, the entry was there, and it also marries up with a 5 minute as well, and I think the 2 minute was even clearer, to be fair. Yeah, here in this situation is even clearer where price actually reacted from. So in that situation, we need to understand that even though we missed the overall analysis, we missed the overall entry where we wanted, which is all the way down here, right? It doesn't matter, because if you follow the time frame rules, you can recreate the same thing. Now, why was I still looking for longs? It's because the whole picture was created, right, from the monthly, from the weekly, from the daily, and then we come to this. So that's the reason why I prefer, because although, to be fair, this trade I don't like it at all because of how long it's taken to move, but you need to understand that the picture was drawn from the higher time frame. So I can actually hold this trade out with confidence. I don't have a reason to close as of yet, because we haven't really disrupted the order flow of the higher time frames. It's still bullish in my eyes. Okay, that's in my eyes. So if you see something different, then fair enough. But it's respecting where price should be reacting from perfectly. So who am I to say otherwise? So essentially, we just had to follow price at this point. Now, obviously, if you're going for intraday, it'll be the exact same situation, but your higher time frame may be the 4 hour, 1 hour, or 30 minute even. If you want to scalp, then use 15 minute. But you always have to build that picture from whatever high time frame you pick. And yeah, the reason why we swing trade is purely because of the effort that you have to put in. It's very minimum, as long as you understand what is actually going on in the market. Now, I hope this video actually showed you how to actually approach the market once you've actually finished the course, because I do understand that watching the course, everything seems to make sense, and then once you get to the charts, your mind goes blank. And I've been there, and I fully understand that. But to be honest, it just takes time and practice, to be honest. But I hope this video has cleared some questions for you.